Good morning, everybody. Johnny Seville from Acorn Wealth, Smart Money Trading. Today, I want to talk about Under Armour. So this is full disclosure, a company that I do hold a long position in some January 2027 long-dated call options. Again, not an endorsement. That's something you should take, but just for full disclosure purposes. Now, the reason why I've picked up an interest in this company is it could be building an argument for some significant recovery. So I'm looking at UAA as a deep value play, a situation where the market may have overlooked its true potential, or it may have been overly punished and may be reverting back in this kind of recovery period. So my analysis is based around this potential inflection point, and is it ready for a rebound? So this isn't just about a cheap stock. It's about a company that may be showing some underlying strength in its fundamentals that is undervalued. So let's dive into why I see it as a potential opportunity. Well, my core thesis for UAA is simple: deep value combined with insider conviction. So we're not just speculating here. Well, we're always speculating, but what we're doing more importantly is we're following the smart money. So when insiders put their own capital on the line, it can be a powerful signal, certainly a vote of confidence that the stock, from their viewpoint, is undervalued. So this isn't a typical growth story. It's a recovery narrative driven by a belief in the company's intrinsic worth. So let's take a look at the broader market context that supports this thesis. So again, the first layer of our analysis points to a significant amount of capital inflow into consumer cyclicals, both from insiders and smart money from places like institutions. So this is a macro trend we're seeing unfold. So as the economy shifts, these sectors often experience renewed interest and capital inflow. And Under Armour, or UAA, as a consumer discretionary brand, stands to benefit from this rotation. This broader market movement provides a tailwind for our deep value recovery play theme. And it's about being in the right place at the right time, and the sector seems to be aligning. But it's not just about the sector. The charts are telling us something too. So beyond the sector rotation, we see a strong technical alignment, which confirms our view. So the charts, as you can see, are showing a potential bottoming pattern and a potential reversal. Now, this was made extra special, and of course what actually got it on our radar at the beginning of the year, because it was alerted by our smart surge system. Now, you've seen me talk about this in many videos. It's one of our absolute go-to strategies in any market condition, especially these. And you can see the smart surge system alerted this 1, 2, 3, 4, 5, maybe 6 days in a row on the smart surge scanner. And you can also see it represented there in the chart as it started to turn up from 450 and then exploded to the upside. So a very successful smart surge signal there, moving up 50% in price to its recent high. So we're seeing the pattern, we're seeing a specialist technical strategy there, which we love, and this technical confirmation adds another layer of confidence to our thesis. So it's about the market itself signaling a change in sentiment, and the most compelling signal of all comes from within the company. Now, when we look at a longer term perspective, when I use the term deep value and recovery play, it's always therefore important to talk about, well, where is this recovering from in terms of where were its previous peaks. So we can see in 2023, this was as high as around $12, $13, and all the way back to 2015, going back 10 years, 11 years now, I suppose, in 2026, this was once a $52 stock. So that's not to say that this is going to go up 1,000% back to its all-time highs. However, with such a large amount of white space above from where its all-time highs were, it doesn't have to reclaim much of that previous territory to offer a short-term, reasonably good opportunity to the upside. So Again, this isn't a solicitation that this is right for you. I'm just walking through the rules and how I think and why I took a speculative position. I went with the long-dated January 2027 call options. In fact, I bought the $7.50 call options, which are out of the money, which is a higher risk play, right? If it does nothing, because it does have to, of course, make up some ground for those to be worthwhile, but I've only invested what I'm willing to lose. So I treat my option position like a stop loss. I'm only investing what I'm willing to lose. So I'm willing to hold that position until worthless or a win. Now, again, with options, you can lose everything that you invest. So they're high risk, they're high volatility. So always speak to a financial advisor before taking any action and determining if an option position is right for you or any position. So let's move beyond the weekly chart and let's talk about the insiders. So on the insiders' perspective, there was a pretty interesting $140 million signal there. And this is perhaps one of the most interesting pieces of the puzzle, because I'm not a fundamentalist. And so if I'm looking for fundamental strength or a story behind the charts, insiders can be quite interesting way to accomplish that, as you'd hope that they know the most about their own companies out of any analyst. So this is a fairly sizable insider bet, a significant investment by those who know the company best. And this isn't just a few executives buying, it shows a substantial commitment to capital. So this level of insider buying was another box that was checked alongside that smart surge signal and that recovery play when we look at where it's come from. So this is why this became certainly something for a watch list that I wanted to share, and one that I'm already positioned in on those options. So we've seen the insider signal, but what if it fails, right? Because any idea, no matter how strong the conviction, no matter what the insiders, no matter how good the technicals, nothing is guaranteed to succeed. So of course, we always want to be looking at where's the opportunity, but as well, where is the risk? And so when we look at where this is based out from, we look at kind of an invalidation area of around 524. So discipline is crucial. And defining risk is something that we do on every one of our trades. So while the upside is compelling, we also manage the downside. And if it were to break down below kind of 524, that would be a critical point where we would say that, hey, maybe this thesis is invalidated for now. So that would be something, if one was trading stock, that I may put a stop loss around that area. Because I've gone with options, I will continue to hold those options through, as I've used my option position as a stop loss, essentially. But that would be the invalidation area where for the short term, maybe a more stock trade focus may be a potential exit point and put it back on the watch list. The clear line in the sand here allows us to participate in the upside while helping to define and control risk. So it's all about smart, calculated investing and trading. So we've covered quite a lot here in this video, and there's so much more to uncover. So to get full access to our in-depth report that goes through UAA, as well as 8 other of our top stocks for January, as well as the sectors that they're in, where the smart money is going, insider plays, and strong technical signals. To get all the details, all you need to do is simply follow the link. I'll hyperlink you to in just a moment. It takes 5 seconds to register, and you'll get instant access to the full January Smart Money report, which dives deep into these insights and actionable intelligence. It's your full guide to a great 2026 ahead. I'll see you on the other side, and I'll hyperlink you there right now.